Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 12th, 2025, and we're diving into Allbirds' latest earnings report for the fourth quarter and full year of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Allbirds, known for its sustainable footwear, has just released its financial results, and there's a lot to unpack, especially with their strategic shifts and financial performance.
Revenue and profitability overview. Let's start with the top line. Allbirds reported a net revenue of $55.9 million for the fourth quarter, which is a 22.4% decrease compared to last year. John, can you shed some light on this?
Absolutely. The decline in revenue is primarily due to lower unit sales within their direct business and the impact of international distributor transitions and planned retail store closures. However, it's worth noting that their full-year gross margin improved by 170 basis points to 42.7%, indicating some operational efficiencies despite the revenue drop.
That's interesting. So while revenue is down, there are signs of improved cost management.
Exactly. The company has been focusing on reducing costs, which is reflected in their improved gross margin for the year. This is a positive sign as they navigate through their strategic transitions.
EPS forecast and analyst expectations. Now let's talk about earnings per share. Analysts were forecasting an EPS of $3.52, but Allbirds reported an actual EPS of $3.23. John, what does this tell us?
This is a positive surprise. The actual EPS of $3.23 is better than the forecasted $3.52, indicating that Allbirds managed to control their losses better than expected. This could be attributed to their cost-cutting measures and operational efficiencies.
So despite the challenges, they managed to beat expectations?
Yes, and this could boost investor confidence as it shows the company's ability to manage its financials effectively, even in a tough environment.
Operational efficiencies and future outlook. John, let's discuss Allbirds' operational efficiencies and their outlook for 2025. They ended the year with $44.1 million in inventory, a decrease of 23.6%, and $66.7 million in cash with no debt. What does this mean for their future?
These figures indicate a strong balance sheet position. The reduction in inventory suggests better inventory management, and having no debt provides them with financial flexibility. For 2025, they are guiding a revenue range of $175 million to $195 million and an adjusted EBITDA loss of $65 million to $55 million, reflecting their ongoing transition to a distributor model in international markets.
It seems like they are positioning themselves for a more sustainable future.
Indeed. By focusing on financial discipline and strategic transitions, Allbirds aims to stabilize and eventually return to growth, especially with their plans to enhance product and marketing strategies.
CEO's perspective and strategic initiatives. Finally, let's hear from the leadership. CEO Joe Vernachio mentioned strengthening their operating model and expanding gross margins. How is Allbirds planning to achieve this?
Joe Vernachio highlighted their efforts in driving gross margin expansion and cost reduction. They are also focusing on international growth through new distributor agreements, which should help them reignite their product and marketing engines. The goal is to return to top-line growth, particularly in the second half of the year.
It sounds like they have a clear strategy in place.
Yes, their strategic initiatives are aimed at improving financial performance and expanding their market presence, which could be beneficial in the long run.
Key takeaways. To wrap up, Allbirds has shown resilience in a challenging year with a better-than-expected EPS and a strong cash position. Their strategic focus on cost management and international expansion sets a promising outlook for 2025. John, any final thoughts?
Allbirds is navigating through a transformative phase with a focus on operational efficiencies and strategic growth. Investors should keep an eye on their execution of these plans, as they could lead to a stronger market position.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Allbirds' performance in the comments below.